Moving ahead, ladies and gentlemen, to the second panel discussion on global affairs and cross-border investment landscape. This session will cover global capital flows and geopolitical dynamics, offshore investment structures, and international fund domiciles and India global investment corridors. I will request our panel members to join us on the stage, beginning with Mr. Balaswaminathan, CEO of SAIML Singapore, former president of Westpac and board member of Straw Acquisition Company. A big round of applause for him. Next, I'll request Mr. Murugiah Rajaram, chairman and partner at K&L Gates Straits Law. Big round of applause for him. I'll request Mr. Ajay Kumar Singh, Vice Chairman of BRICS Chamber of Commerce and Industries. I'll request Mr. Ashok Singh as well to join. Next, I will request our moderator, Mr. Vinod Varma, the CEO of UpTik, to kindly join us on the stage. Very, very warm welcome to all of you. Over to you, Mr. Vinod.
Good afternoon, everyone. It's a genuine privilege to have here today, to be sitting with such distinguished people who have moved capital across the world and understand this market like no one else. Drawing from global policy, institutional investing, international law, and banking, this panel offers a 360-degree view of how overseas investments are evolving in a world marked by rapid change and growing complexity. At a time when investors face shifting regulations, geopolitical uncertainty, and tighter scrutiny, such depth of perspective is essential. Overseas investment today is no longer guided only by opportunity. You on it. Global market today is mobile and trust is not.
Yeah.
From your perspectives, what actually determines where capital finally gets deployed across borders?
Yes, really you are asking very good question. Trust is the most important thing for any business or for any investment company or for any investors. I think कोई भी इन्वेस्टर जब कभी इन्वेस्टमेंट कंपनी में किसी इन्वेस्टमेंट को लेकर के आता है तो सबसे पहले उनके दिमाग में एक ही चीज़ होता है कि हमारे पैसे की सेफ्टी जो है कैसे हो, सेफगार्ड कैसे रहेगा। जिस तरीके से अभी पूरे विश्व में मतलब आंतरिक स्थिति चल रही है उसमें रिस्क काफ़ी बढ़ा हुआ दिखता है इन्वेस्टर्स को, तो ट्रस्ट सबसे इम्पॉर्टेंट है। हमारे प्रधानमंत्री हमेशा एक ही चीज़ कहते हैं, सबका साथ, सबका विश्वास और सबका विकास। इसमें भी कहीं न कहीं मतलब जो है ये बातें तभी सत्य हो पाएगा जब मैं समझता हूँ कि ट्रस्ट बना रहे। इन्वेस्टर जब कभी आता है आपके पास में तो उनको अपने पैसे की सेफ्टी चाहिए होती है। वो एक ही चीज़ सोचता है कि मैं आज देने आया हूँ, कल मुझे वापस में क्या मिलेगा। तो किसी भी कंपनी के लिए मैं समझता हूँ कि ट्रस्ट को बनाए रखना, उसके लिए सबसे पहले तो सरकार रोज़ नए नए चेंजेस कर रही है, किसी भी तरीके से इन्वेस्टर का भी जो है सेफगार्ड बना रहे। तो हमें सबसे पहले जो है बायलॉज जो भी चीज़ें हैं उनका पूरा ख्याल रखना होगा, उसके हिसाब से ही कंपनी को चलाना होगा। क्लियरिटीज़ मतलब जो है रिस्पॉन्सिबिलिटी ज़्यादा है इन्वेस्टर की, इन चीज़ों के ऊपर पे भी ध्यान दें। मैं समझता हूँ कि इन सब बातों को ध्यान में रखते हुए आगे बढ़ें तो कंपनी पे इन्वेस्टर का भी विश्वास बना रहेगा और इन्वेस्टमेंट मैं नहीं समझता हूँ कि कोई दिक्कत होगी, क्योंकि आज पूरे विश्व में सबसे सेफेस्ट जगह जो है वो भारत हमारा जो है देश, ये दिख रहा है. Thank you very much.
Thank you, sir. Sir, Rajaram sir, the same question. We would like to hear your perspective.
Let me start by thanking you. When I got the invitation, I was very impressed with someone so young is embarking on such an exciting journey. And then sitting there and listening to Mr. Chawla's conversation reminded me of years back. And it's an easy question for me. I come from a small country. I'm from Singapore. I was born here. I went there 70 years ago. Have been there since. We have nothing. What we have gathered the trust. And that's on a lot of things that Mr. Chawla said. Transparency, a good system, and be open about it. And you talked about your weekly reports or your monthly reports, extremely important. And just look at Singapore. We have no problem getting investments in. We have a long queue of people waiting to get in. We vet them because that's where we have earned. And we've earned it solely by building trust over the years. And you're starting. You're young. I say everything positive here. You just got to maintain the same pace of activity and build up the trust. Everything else follows. Investors and businessmen are not interested or not worried about losses. We know there's an equal chance. You either make money or you lose money. You can't say they make money all the time. But when they do suffer a loss, they want to know why. They want to be given an early option of exit. Again, I've got to repeat what Mr. Chawla said. And on that kind of background, you build. And that's where Zach's story of how Singapore has got to where it is.
Thank you, sir. Thank you for such great perspective. Bala sir, I'd like to hear it from you.
Firstly, again, like Rajaram sir, I would like to thank and applaud Vinod, Ganesh, and the entire UpTik team to have put together this fantastic event. One of the fundamental principles of an event like this, and indeed, as you're building a great organization, is to become part of thought leadership. And I think today has, in my mind, the first 2 hours has been a great approach in how we think about building business. And I was telling Mr. Rajaram sir that Mr. Chawla's speech was very pointed in that direction. And in some of the advice that he gave, I think the UpTik team will truly benefit. Coming back to the point of trust, I think it's very interesting and it's very topical. Trust has always been an issue. And if you study history as I do, and if you look at history of money, over 2,000-3,000 years that money has existed. From the time the first silver coin was produced, I think somewhere in now modern day Turkey, there has always been a question of how do you trust the system to give back the money that you give the system. In this, there are two major counterparts. There's the issuer and there's an investor. And sitting between the issuer and the investor often are intermediaries such as UpTik. And when there are multiple intermediaries, and today's world where geopolitics has become a very important and interesting subject, to have that transparency and communication, that the interests of the investor and the issuer are aligned, become very important. I think when you look at trust, it comes back in my mind, trust can be a very esoteric word. It can mean lots of things to lots of people. When a husband gets married to wife, there is trust. In the world that we are in, and when we come down to finance, in my mind, the meaning of the word trust must reflect only on one thing: alignment of interest between issuer and investor. To Rajaram sir's point, if that alignment means profit, so be it. If that alignment results in a loss, so be it. How do you get that alignment? Understanding very clearly what the investor wants and developing your product suites and solutions to what the investor wants. Regular communication. What Chawla sir said, not only with the chairman, but regularly communicating with your investor what is happening and making sure that at all points of time the investor is constantly updated, not just on the performance of your company, but the factors which determine success or failure. I think if you can get alignment, you will get trust. Before I conclude, I think trust is again a very funny word. I like Mr. Chawla's sense of humor, so I will borrow from that, sir, with your permission. You take out the word T from trust, it becomes rust. And that's the difference between a good company and a bad company.
Thankful for the joyful perspectives that you always give, sir. Sir, so my next question would be to Ashok Kumar, sir. From a BRICS perspective, how are global geopolitical shifts and evolving economic alliances influencing cross-border investment flows today?
मैं समझता हूँ कि चावला साहब का जिक्र कई बार आया इसमें। इन्होंने अपने संबोधन में सभी चीज़ों पे प्रकाश डाल ही दिया है, कुछ कहने की और ज़्यादा आवश्यकता बची नहीं है। फिर भी मैं समझता हूँ कि ब्रिक्स काफ़ी सोच समझ करके जो है ब्रिक्स कंट्री एंड बियॉन्ड, इसमें अभी पहले तो 5 कंट्री से स्टार्ट हुआ था, फिर 10 हुआ, प्लस इसमें और रोज कुछ न कुछ बढ़ ही रहे हैं। तो ब्रिक्स का रोल जो है बहुत सही रहेगा और कई चीज़ें मतलब जो है ये लोग आपस में मिल कर के सोच रहे हैं, कर रहे हैं। इस वक्त में जो विश्व की स्थिति चल रही है, हर तरफ में कुछ न कुछ डिस्टर्बेंसेस हैं। अमेरिका के संबंध में अभी हम लोगों ने देख ही रहे हैं कि किस तरीके से जो है नए मतलब जो है उनके कभी टैरिफ से संबंधित, कभी किसी और देश को संबंधित चीज़ें आती रही हैं। तो उधर रशिया और यूक्रेन की जो है चीज़ें हैं, उससे पूरा यूरोप भी प्रभावित है। तो सब तरफ जो है सभी एक साथ अगर हम देखें तो विश्व में ब्रिक्स के जो हैं उसमें खास करके भारत, इंडिया की तरफ जो है लोग देख रहे हैं। और मैं समझता हूं कि इन्वेस्टमेंट के लिए अभी सबसे अधिक भारत जो है का एटमॉस्फेयर हर तरह से सूटेबल है। यहाँ पे बिजनेस में भी जो युवा लोग आ रहे हैं रोज़ नए, तो उन सब का भी जो है आज आप लोग भी जो हैं अपटिक ने भी एक नया मतलब अध्याय शुरू किया है। हमारी हार्दिक शुभकामना है कि आप आगे बढ़ें। जितने लोग यहाँ पे आए हुए हैं निश्चित रूप से एक विश्वास के साथ आए हैं और उस विश्वास को आपको बनाए रखना है और यहाँ पे इन्वेस्टमेंट की कोई कमी नहीं होने वाली है। निश्चित रूप से जो है पूरे विश्व से लोग यहाँ पे इन्वेस्टमेंट आए।
Thank you, sir. My next question would be to Bala, sir. From your experience in Singapore, what typically attracts global capital towards structured offshore vehicles rather than direct investments?
It's a great question. Let me preface what I want to say with some statistics to answer that question. There's a significant global shift happening in the flow of money. In the last, let's say 100 years, from industrial revolution up to what we saw recently, a lot of the flow of money was institutional. So it was corporates, it was large institutions, it was banks. That shift is now moving towards family offices, multi-family offices, and a lot of private wealth. Let me give you one number. We all know what is the total GDP of the Indian economy is, 5-6 trillion. Do you know how much money in the next 10 years is going to move generationally within families from one generation to the other? I'm not talking of institutions. I am not saying how much will Reliance move by. How much will the wealth move intra-generational from one generation to other? UBS has put out a report 2 weeks ago that is $80 trillion. Just let that sort of evolve in your mind. $80 trillion. That is 16 times or 15 times India's GDP. That is the amount of money which is going to move within the family network. Now you come down to the next generation of families who are inheriting this wealth. This wealth is coming, a lot of this wealth is coming in financial assets, shares, maybe digital currency, gold, silver, etc. The next generation is now wanting to believe in a much more balanced world things like what Mr. Satyamurthy is saying of the foundation that he's setting. So the objectives of what this next generation is going to do with the wealth is going to be very, very different than what they did in the past. With that preface, I'll answer your question. This is where countries like Singapore come in, which give you a very robust regulatory framework to be able to deploy that money in a manner in which, again, coming back to what I said, there is alignment between what you want to do and what objective is achieved. Reserve Bank of India, for example, put out a paper in, I think, 2 or 3 years ago, recognizing international VCCs as a framework. And they basically said it has to be from jurisdictions where governance compliance is very robust. And trust me, there are very, very few countries in the world which offer that framework. So if you want these generational wealth investors to invest in structured products, in alternate investments, where liquidity is not guaranteed by the market, but liquidity is guaranteed by a structure, then you need to be in a place where the regulatory framework is very high. I mean, we are sitting in Bombay Stock Exchange today. Why is Bombay Stock Exchange relevant? Why is any stock exchange relevant? It is relevant because it does a very simple role. It guarantees settlement. Why does it guarantee settlement? Because when I sell a stock and Vinod, you buy the stock, there is no guarantee that I will deliver the stock to you. And when I deliver the stock to you, you will make that payment. That's why stock exchange exists. The moment you go to the alternate investment market, including structured market, private credit, there is no stock exchange. When there is no stock exchange, how does that settlement happen? So it is going to rely on the robustness of infrastructure, financial infrastructure, to be able to guarantee that settlement. And therefore, I think countries like Singapore are going to play a very, very large role in the future in making this happen. Not just from the perspective of what Rajaram said, that we, as a country, we have, huge amount of trust. But if you look at it very carefully, Singapore is one of the countries which has stayed away from this whole way of geopolitical issues. I mean, India will say, oh, China, we don't want to touch. Somebody will say, Dubai smell test. The Supreme Court has said, oh, Mauritius, unless there is mind and body, we will not accept. Singapore has answered all those questions. So I think Singapore is not just in the top quadrant, it is the number one country to attract global investments.
My next question would be to Rajaram, sir. From a legal standpoint, what are the most critical considerations Indian investors overlook while structuring overseas investments?
I don't know whether our friend Mr. Chawla, we're both from the same tribe. See, investors want certainty of outcome. Right decision, wrong decision, we get into a dispute. We want to make sure that there's a framework that will give you a certainty of outcome within the shortest possible period. There used to be a joke, and it's no longer true. Indian system has improved. My grandson will see your grandson in court. There's a length of time taken. In Singapore, 18 months is settled. And that's one of the plus points. And I'm very, very cautious. I'm speaking to an Indian audience. I used to chair the Singapore Indian Chamber of Commerce in one of my conferences. They say, you're a village. You don't compare yourself with us. So I am conscious of that. But I think investors basically want, as Bala said, certainty of outcome, a robust system that is implemented. We have alternate dispute systems. India is also developing arbitrations, mediations. And I think all this goes towards building the attractive points. Someone said the next 10 years, India is a good place. I think the next at least 3 decades, India will continue to do. And I call the next 3 decades of what I call triple I. Together with India, we have Indonesia and Indochina, minus Myanmar. If you look at demography and you look at the growth factors, they're all growing. Microfinance is booming in all these places. So what you're doing here is being replicated across these 3 other jurisdictions. And the alternative market includes private credit. Everybody wants to get involved. They want to make sure what the exit, they're not sure. If I go into a private investments, the alternative investments, how do I get out? What is the certainty that somebody will buy me out? How long will it take? What if they don't list? So these are things that you have. And as long as you have certainty in your products, I think you'll continue attracting investments not only from your local population, but also from the international population.
Thank you, sir. My next question would be to Ashok Kumar, sir. Sir, do you see Indian investors underutilizing global opportunities due to policy perception gaps or rather than actual regulatory barriers?
मैं इस विषय में एक ही चीज़ कहूँगा कि मैं बेसिकली फाइनेंस साइड से नहीं हूँ, इन्वेस्टमेंट के संबंध में बहुत अपना ही विचार सिर्फ रख सकता हूँ। इस चीज़ के लिए मैं समझता हूँ कि हमारे दोस्त आला साहब बैठे हैं, वो ज़्यादा अच्छे से रिप्लाई कर पाएंगे, तो मैं उनका विचार ही सुनना चाहूँगा। अगर
Sure, sir. Yeah, please.
Happy to answer that question, Vinod. I don't think I don't think it's an issue of regulatory constraint or policy perception. The reality has been that all investors have their one objective in mind when they invest, right? It changes as you course, but the one objective is how do I maximize return? That is always then somewhere along the path comes the objective of saying how do I not maximize return, how do I maximize risk return? But in the journey of investment, first thing a person always says is, मैं कैसे सबसे ज्यादा पैसा बनाऊंगा? Then he comes and says, no, hang on, I need to now align it to risk. The Indian markets in the last several years has been one of the most outperforming markets. So you pretty much did nothing and you could make, like you put money into a SIP and you could make 20, 25%, even adjusted for dollar return, it was 14, 15%. It beat any asset class anywhere in the world. Real estate over the last 4 or 5 years has done extremely well. So the investor did not have to think. He would put money and he would get money. But that has changed. I think 25 was the first year you saw that the Sensex actually did not deliver the sort of returns it did. Real estate has become flatter. So now coming back, I think one of the points which, I don't know what previous speaker made, that diversification becomes very important. Again, history, we all will say diversification is absolutely a must, but somebody won a Nobel Prize to say diversification is an absolute key element of risk management in financial theory. Now, it's intuitive, but nobody does it. Somebody won a Nobel Prize for that, right? So when you think of diversification, you start thinking of diversification not just geographically, but you start thinking of diversification globally. And I personally think, as I speak to a lot of family offices, high net worth individuals, people are now beginning to allocate between 15 to 20% of what they have, their net worth, to global assets. It's not to say that India will not be the most performing market. Indeed, I would say that global investors need to allocate money to India, but equally, Indian investors need to allocate money overseas. And there is neither a policy constraint nor a regulatory challenge in doing it. Reserve Bank of India has been absolutely clear. I commend them. They have maintained the LRS policy for several years. They have come with a family office policy. Authorized dealers have the ability to remit money if you do the right things. So I don't think there is any issue with either policy. I think it's just that people need to be aware that if you look at a portfolio construct, if you look at a balance sheet, you need to have both domestic assets and international assets.
Since we heard from an Indian investor point of view, staying on the same question, sir, how do international investors evaluate Indian origin capital differently once it comes through globally recognized structures?
How do international investors
how do international investors look at Indian investment?
See, capital is capital. Let's come down to this, right? You might, when it comes to vegetables, you may make a distinction between organic vegetables and inorganic vegetables. You may make a distinction between fair trade and non-fair trade. Capital is capital. One of my bosses, who was the chairman of ICICI, told me, never look a gift horse in its mouth. If you're getting money, take it. I don't think international investors are as worried about where their capital comes from. Having said that, they now want to make sure that the capital, when it comes back to Mr. Rajaram's point, there's certainty that they will get their money back. So it must come from a jurisdiction where they know that when an exit happens or during the course of the investment, there are no speed bumps. And again, I'm not a legal expert and I don't want to make any point on law here, but if you look at the recent case of which on Tiger's exit, on the Mauritius case, and again, I'm not saying the judgment is right or wrong, but it creates uncertainty. So when to remove that uncertainty, investment through a jurisdiction or through a structure in a jurisdiction is better. It does not mean that money will not be taken if it comes from somewhere else. I'm just saying that it is better.
Uh, this is to Rajaram, sir. Sir, how does the VCC framework in Singapore address governance, flexibility, and investor protection compared to older offshore structures?
Firstly, VCC is a regulatory entity. It's regulated by Monetary Authority of Singapore. Uh, Lawyers involved in cross-border financing transactions know how strict the requirements are. So when you go back and say, as opposed to a normal company, a VCC structure is a regulatory entity without the cost associated with a full regulatory entity. If you go to a direct fund under the Monetary Authority of Singapore, your regulatory cost is very, very high. Your compliance cost is very high. You must have two representatives, compliance officers, you know what they cost in Singapore. So BCC is a structure that enables you, in addition to having variable capital component where you can have different shareholders at different time, and you can have different class of subscriptions. All that aside, I think the most important thing is you tell yourself that I run my financial management in a way that can withstand scrutiny by one of the toughest scrutineers in the world. MAS is probably second only to the, I don't know whether the English or the French, or the Swiss are worse. I will rank MAS as the toughest regulator in the world, followed closely by the Swiss regulators, and then UK. But you're telling the investor, look, I am taking money on a VCC structure. I am prepared to be scrutinized by one of the top regulators in the world, and that speaks volumes. If you are afraid of being supervised, you will not go for a VCC structure. You go for a VCC structure and you are making a bold statement out there. So that to me is the most important thing about VCC. It gives you a stamp of saying that I am prepared to be scrutinized from the word go.
I'll add one thing to that. I think the important thing in a VCC structure to the older structure is a VCC structure allows you to create non-commingled investment opportunities. So when you go into a VCC, you're basically protected by the walls of the VCC. Your investment will not be impacted by the fund manager's other investments. So it can be cocooned within a structure. The previous structures had cross defaults, has ability, if the fund manager goes down, the structure could go down. But the VCC, because of the points which Rajaram sir said, the regulators allowed it to be in a non-commingled format.
This question is to Bala, sir. How important is exit planning in overseas investments compared to domestic ones? And where do most investors get it wrong?
I think exit planning is important wherever you are. Having a time frame of when you enter, what is the process, what's your exit is very important. I think where investors get it wrong is only one word. I mean, that is again, word has haunted us for 2000 years. If you go back to studying history of money, that word will keep coming back. That word is called greed. It is only because of greed. And if what Mr. Chawla said earlier, if you heard his good advice which he gave, it comes back to that, is, if you're not greedy, if you have a systematic approach to investment, if you know what your objectives are, it could be 12% for someone, 15% for someone, 8% for someone. If you are if you structure your investments in that manner, I think you will manage your risk better. It's only when, like he said, मैंने 5 करोड़ लगाया, 7 करोड़ होगा, 10 करोड़ होगा, 20 करोड़ होगा, that sort of stuff is when things happen. I mean, there are people who make money, but there are more people who get it wrong. I think having a very clear idea of what the exit mechanism is and having your product designed to align to that exit mechanism, I think will remove elements of greed, at least from the fund manager's perspective.
Let me just add, I think the exit strategy is the most important consideration, especially for someone like in my age group, right? For me, the first thing I look for is how long will that do and when do I get my exit? So clear exit strategy, irrespective of the class of investment, I think is one of the more important considerations, perhaps more important than even the rate of return or the risk of the tech.
Having said that, I keep banging my head. He told me earlier in the morning, I take a big hammer and hit myself because I bought silver at $12 and at $40 I sold. My exit strategy was $40. Today's $99.
How many people over here are from Bombay Stock Exchange or into stock market? Lots, I guess. I would like to say, Rajaram ji, one thing. No. I'll just like to say something. I don't think it was in my profile. I've done my master's in law from Georgetown, USA.
I saw that, sir.
And I did my thesis on stock market. And I think I must say that because we all are talking about our experiences, but I would like to say destiny plays a very big role in what we come out and how we shape out, irrespective of what lessons we give you, what experiences. So when I wrote my thesis, final thesis, before I was saying goodbye, and I was, by the way, AAA student. So one of the only few students who scored AAA in all the subjects. And when I wrote my thesis on stock market, it was for 1,208 pages. And the last concluding sentence made it go for publication in World Bank Journal. And you must hear that statement. You must hear that last sentence. I myself demolish my theory, as only God knows why stock market rises and falls. So please remember, destiny plays an important role in whatever we do.
I agree, sir.
I had to intervene on this one.
रोज सुबह हनुमान चालीसा पढ़ो.
As a closing question, this is to all panelists. How do an Indian investor wants to begin overseas investing responsibly? What is one principle they should never compromise on?
So I can start. I think not one principle, but I would say 3 or 4 they should never compromise on. I think selecting the people they partner with, I think is absolutely important, because you're not sitting in the same country. You're sitting in India, and if your fund manager is in Dubai, Abu Dhabi, Cayman Islands, Singapore, Hong Kong, you have to select the right counterparty. I think that's the first thing. Second is what I think you said, or one of your co-founders said, is you don't put all your eggs in one basket. You have to make sure the allocation that you do, especially when you're investing in an overseas country, is a percentage of your total net worth. It cannot be your total net worth. And I think RBI has been fantastic in setting that framework through the LRS framework, right? $250,000 per person per year. I think that sort of caps it in some ways. I think I would say that's the second principle, which is very important. Selection of fund manager, making sure that you're not putting all your eggs in one basket. And third, which is absolutely important, is having an understanding of what the investment is. I think just the fact that I'm putting money into dollars somewhere without really knowing. See, when you're sitting in India, you have you're reading Economic Times, you're reading Business Standard, so and so companies coming with an IPO, so and so companies ka kya result aaya, all these things. But when investing in an international market, you may not have access to that data unless you specifically go and subscribe and look for that data. So if you're investing money, invest some money in the education of where that investment is going as well.
Yeah, I think all those are important. I do nothing to add on, weigh the risk and risk appetite and everything else. But I think the most important thing is the quality of the fund manager. I said earlier, you don't make money in all your investments, but you want to make sure that the loss is because of an economic factor and not an integrity factor. So integrity, and it comes back to trust of the fund manager, is the most important factor. Making or losing money, silver is so early, there's always somebody else who buys from you, so he's luckier. As Mr. Chawla said, destiny, nobody knows when it goes up. Even God doesn't know, maybe. I'm not sure God knows. Otherwise, all the priests will be very rich. So I don't think, all those are okay. No difference for local investment. But the integrity and trust issues are the most important consideration, if you ask me. And remember when India first opened up, and Manmohan Singh was was your finance minister, and Chidambaram was your commerce minister. Singapore, I came with my prime minister on a delegation, and they asked us to channel Singapore investment. And my prime minister then, Goh Chok Tong, said, let's start a Singapore fever. I was then the vice chairman of the Singapore Indian Chamber, so we started a fund called Parameswara, started a company called Parameswara Holding to do the Bangalore Technology Park. So we went and raised money. We had not people who invested in us, only $20 million. And I'm talking about 30 years ago, 20 million is a lot of money. We took minimum investment was 10 million, so we had about 1,000 over investors who came. They trusted us. They didn't know what India was. India was just opening up. But that 1,300 people got 10 times their money 20 years later. We paid them and I wound up the company. We all put our own money in. We got nothing for management fee. But the important thing is they trusted whoever the face of the company was. And their trust paid off. We could well have lost because of Bangalore Technology Park, phase one, we lost money. We made money somewhere else. But all those are decisions they were prepared to. But the most important thing is trust of the fund manager or the company that is doing that.
मैं समझता हूँ कि फिर बात ट्रस्ट की आई है अल्टीमेटली। तो ट्रस्ट निश्चित रूप से जो है सबसे इम्पोर्टेंट फैक्टर है। जो भी फंड्स आते हैं फंड मैनेजर के पास में, मैं समझता हूँ कि किसी न किसी रेफरेंसेस से ही फेस वैल्यू जो है सबसे इम्पोर्टेंट है। और अपने फेस वैल्यू को बनाए रखने के लिए जब तक आप सोचते रहेंगे कि नहीं हमें किसी भी स्थिति में अपनी क्रेडिबिलिटी को ख़राब नहीं करना है। ज़्यादातर क्या होता है कि लोग प्रोमिसेस कर देते हैं कि मैं आपको, जैसे चावला साहब ने कुछ समय पहले एग्जांपल दिया, एक 5 करोड़ की जगह पे 7 की जगह पे 10। तो निश्चित रूप से ग्रीड में लोग इन्वेस्टमेंट करते हैं और जब कभी भी जो है उनका वो पूरा नहीं हो पाता है तो उसमें जो भी फंड मैनेजर्स हैं सबकी बदनामी होती है बेसिकली। और कहीं न कहीं जो ट्रस्ट टूटता है, तो ट्रस्ट को बनाए रखना सबसे इम्पोर्टेंट है, मैं यही कहना चाहूँगा।
I leave the floor for a couple of questions. If someone wants to know about overseas investment, you can hear directly from the panelists. 1 or 2 questions. Okay. Yeah. Can you pass on the money there? Can you pass on the money?
Hi, very good afternoon, and it's amazing to hear all of you. Also, Mr. Chawla, I am actually making notes, all the way in my phone. Just a question I want to share that I am at my business, in my business, at a very nascent stage. Even have not tried anything related to stocks and just learning financial knowledge. I just want to know, how as a beginner we can learn more about these firms. From you guys. I'm sure you guys also must have started somewhere. So where can I learn and also make a legacy for my kids?
Um, there's from where we started, there was nothing. There's a word in Urdu, khun faya khun. So जब कुछ भी नहीं था तब कुछ भी नहीं था. But today there is lots of opportunities, especially in a place like Bombay. There's humongous amount of opportunities to learn. BSc itself has got lots of tutorials and stuff like that. But I'm not promoting, but an ex-colleague of mine, both KPMG and Standard Chartered, Jatin Lodaya, he runs a financial awareness course free of cost for anybody who wants to learn. Fantastic modules. He's built extensive modules on financial literacy across Indian markets, international markets. So people who want to learn, there is enough today available online tutorials where you can actually learn. Honestly, it's a bit like swimming or cycling. You cannot learn until you get into the water or get on a cycle. So you have to ultimately get into the water or get on a cycle, practice, make mistakes, learn from the mistakes. We've all got bruises. There are several bruises in our body. Chavlaji spoke of one bruise. We can talk of 20 bruises each. There are lots of bruises. But unless you're on the field, learning will not be complete.
Sure, thank you. I just want to add one last thing. My name is Shubhjeet Kaur Malhotra, and as Mr. Chawla just shared, that he also remembered a song. Me being a Punjabi, I actually did pranam to Bombay Stock Exchange building when I entered. So this is genuinely a very nice moment for all of us. Thank you.
You're in very good company with Mr. Chawla. He's the global ambassador for Punjabis.
And I'm here with my son, he's just 15, and I actually brought him here from Delhi that, he should be introduced to all these things.
Very good.
Thank you.
Okay.
We will take one last question. Yeah? Say yeah.
Hey, hello, sir. I work for one of the private equity firms back in US. So what I see basically here is there are so many powerhouses back in West. They started much earlier in this alternative investment spaces, and the fund they acquire basically the trust basically from the HNIs and the institutional funds. Now, how do you see this kind of environment being created in India, where we are building such powerhouses in the alternative investment spaces and gaining the trust of this HNIs, institutional funds. They also have already options into floating their funds into onshore investments and everything. But how do you see we're able to create in India like these kind of powerhouses where everyone has access to investing into these spaces?
I think it's a question of time, and the time is right now. If you are coming from US, these structures have existed for a very long time in the US. Capital flow in the US has been huge. The US economy has $39 trillion of debt. They add $2 trillion every year. They're staggering numbers, right? So when you look at the financial muscle of America, it's vastly different. But if you look at India, India has gone from 1.4 trillion to 5 trillion in the last 10 years. Between 2014 and 2025, we've grown 3 times. And it's going to be a matter, in my mind, I completely agree with everybody who said this, that in the next, now we've got the benefit of compounding, we've got the benefit of overseas investments, we've got the benefit of more companies listing in the stock market. I think this 5 trillion will become 20 trillion. Whether it becomes in 5 years, 10 years, 15 years, doesn't matter. So you got to take a view that in 10, 15, 20 years, we will be where America is today or was 5 years ago. And then you start by saying, which are the animals which are going to populate that jungle? And I have no doubt in my mind that institutional groups, PE, VC, large companies will actually become prevalent. I agree with you that if you look at the size of Ps today in India, they're not of the size of global. You don't have a like a KKR or whatever. I believe the biggest P in India is, I'm told, I may be completely wrong, is Blackstone, which is 65 billion or whatever. And you go to America, 65 billion won't even probably, be in the top 10. But I just think that in the next 15 years, with the flow of money, with the opportunities that India is going to offer, what you're saying will happen. I think it's already started happening, and this will gather great momentum. People like UpTik, Fiscal Town, who are all coming in, could well become these powerhouses, as you call them, of the future. So I think the time is right.
Thank you so much, sir. We'll take further questions offline over lunch. So I'll request you to please conclude the panel discussion.
Thank you for all those perspectives. What clearly emerges from this discussion is that overseas investment today is not about chasing geography. It's about choosing the right structures, jurisdictions, and governance frameworks that allow capital to grow responsibly and endure over time. Thank you to all our panelists for sharing their insights, and thank you for all being part of this.